All right, now we are recording. We are not giving out the replay, but it is for us. All right, cool. So I'm going to start with the SPY, and then I'm going to look at the ES. Okay. So since last week's call, we had that downdraft right there. It's a little bit larger, right? You'll basically see from the high or previous high, we had a really nice move down, right? And then we recovered here. I thought this was just a dead cat bounce. Then once we closed above it, I was like, all right, maybe we're going to start to recover a little bit. Where the market might start to slow down is right in this little cluster here. Let's see if I change this to a weekly, if it starts to look a little differently or a little plainer, I should say. No, not really. Okay, that's a good sign for the market that little daily downdraft may not hold. All right, cool. So what I was looking at was this little cluster of candles here, and then the drop, that initial red candle, and then basically the gap down. That was a really nice move down. I'm betting it looks a little cleaner in the ES just because it's 24-hour market. When markets close, obviously it creates a lot of gaps. So let's start here. Great. I mean, that's an old level that worked out just beautifully, especially if you held on all the way. But like in here, for the market to get back to new highs, it has to get through this first. So if you're long, that's your place of potential caution, is like in here. I'm even just going to draw the top part of it. I don't really think I need to do the whole. It has to get through here, obviously, but I mean, this is like a potential shield. If it gets through here, I don't see why we wouldn't go back to new highs. So this is like your slow point in getting back up. So keep an eye out for that. This really recovery must have just been the Fed signal yesterday. I mean, let's face it. I mean, they're saying what they need to, and the market seems to respond or over respond. So give me 1 second, check the chat. Yeah, you can put your symbols in right away that you want to look at. QQQ, go into the SQ short. Sure. Yeah. Well, you know what? I'm gonna do 2 more symbols because that I'd love to actually see what the Qs just did, and then Mitch is just connecting to audio now, and then I'll turn it over to him. Give me 1 second. Make this a little larger. So I like this level on the Qs a little bit more than I do on the SPY, to be honest with you, just from the structure of it. But here's the gap fill that Amit was talking about. Here, it just got here. In here, they don't look all that different at all. This just speaks to me a little bit more because it tried to come up and then came back down. I think Amit, if I'm reading this chart right, I'm betting there's something right in here. If I drop down to like a 2-hour.
You put it on the time frame as a day, so you gotta.
Oh, thank you. Yeah. I didn't even notice that. Look at that. Yeah, thanks.
No problem.
What was it? I was talking to Thinkorswim also. Like, what the hell am I going to do with that? On a 2-hour, like a 5-minute chart, do a lot. Oh, cool. All right, let's see some action here. All right, so I do like this a little bit more than the gap fill or just the gap fill. I love when it does this, when it just trades sideways for a couple of hours, which is basically, I think, a whole day's of trading, and then just the gap. Boom. Mm-hmm. So we could see some action off this imminently while we're talking. Get rid of this.
Yeah, it's already moving out of the zone.
Let me just clean this up a little bit more. Nice. All right. So yeah, it's backed off a little bit. Obviously, if you got short here, you're not exactly making a ton of riches. But I'd be curious to see where a potential exit would be and what does it line up with. All right. So if price comes back down,
you could definitely get 200%. Yeah.
Yeah, right around the 200% area is a good. It's a little bit of a conservative trade, but we're gonna see. And I mean conservative in the sense of you're not going to get a whole bunch of money out of it. But that is a cautious somewhere in the 2.5. I really think right at the 2-to-1 or 200% get out. But this is an interesting trade. We will see in real time what it does. Let me go back to the chat for a second. Sauce cancels your shorts in the middle of the night and doesn't notify you. No, but that's important. I did not notice that. I have not noticed that. That is not cool.
That usually only happens if you don't have the available funds to continue your short if it's going in the wrong
I never
direction.
saw that. I think it's knowing a mid. I doubt that's the problem, but there is all kinds of things that wig out with systems and stuff like that. You got to remember. I know technology is not flawless, I mean, it just is what it is. But that is not cool. If you think, I'm making money, and it's like, well, where's my P&L?
Mm-hmm.
SQ
it has disappeared.
Yeah, it's disappeared. Yeah, no one likes that. SQ short. I assume you're. Oh, it looks just like the Qs actually, but we have broke through this, so I'm not gonna. So right there, kind of went through it already. So I'm not keen to get in short, but right above here.
Yeah, I was looking at that.
Oh, he put a 15-minute, so maybe he's looking lower. But on a 2-hour, this doesn't look too shabby.
Yeah, that's pretty nice.
Especially since he got here. So we'll see what happens when he gets
and then
there.
Take profit probably around 258. Yeah.
Yeah, you could. I mean, I think this is like anywhere in these two areas, I would look to take profit, put it that way. So depending on your level of advancement, somewhere in here are potential. Yeah, there's a relatively small zone too, but no, this will do the trick. I think it's just because I have a little bit tight. All right. Mitch, are you audible?
I am live and on the air.
I am very sorry. I think some of the technical difficulty is my fault. I notified them that I am a big idiot. So apologies if that caused a couple minutes of stress. But if you want to get cheered up, I have a dog. Here's my dog. That usually cheers everybody up. Oh, where's the camera? He's a little bit old, but hopefully that brings joy to everyone's day.
Better than cat videos.
Yeah. I'm trading from home today. Let me see. That's a cool level, though. As opposed to going into the drop-in pass. Let's see. What does this look like on a 15-minute comment that you were looking at? And then I'm going to turn it over to cancel. Oh, yeah. Either way, that got broken in. But no, I think just stay with the 2-hour if you're looking at this. I mean, I like the level that I laid out on Square. All right, Mitch, we did a deep dive on the ES and the SPY. We looked at the gap fill on the Qs. If you want to get started talking about what you want to talk about, and I will be here to man the chat.
Awesome.
I'm going to stop sharing so you can share, okay?
Okay.
Give me 1 second. Sorry, give me 1 second. Mitch, I think you can just take it. See if you can share. That way it'll show.
Yeah, no. Well, okay. I thought you were going to release first. Okay. Let me send it out.
I'm trying. But...
Yeah, hang on. Yeah, I can do that.
All right, awesome. Thank you.
Yeah. All righty. Good morning, everybody. A couple of weeks ago, when I was here a couple of weeks ago. Last week I wasn't here because of the Jewish holiday. But a couple of weeks ago, I showed you guys something in terms of analyzing sectors. And so I just kind of want to do a real quick go over of that. And then I'm going to show you essentially how that applies to putting a finer lens on it in terms of actually screening for intraday setups here. Okay. So let me just get this out of the way here. And give me 1 second here. Just shuffle things around here a bit. Okay. So okay. So this is how things finished last week here. Okay. Basically, this is the thing that I was showing you guys a couple of weeks ago. So this is something that's based on an intra-week analysis of all of the major sectors. And for those of you familiar, there are basically, depending on which ones you want to count, anywhere from 10 to 13 major sectors. I kind of use all of them. There's sort of core 9 or 10. And then there's also ones that have been added in the last 2 or 3 years that people really start to look at, which are the transports, communication services, real estate, and retail. They used to be kind of the core 9. Now there's sort of the core 13. So I monitor all 13, and then I also look at the SPY to give me context in terms of the broad market, okay? So this is the intra-week thing that finished last Friday, okay? Then, so we can see that energy was obviously the high flyer last week, and basic materials and utilities were the weak ones, down about 3%, and energy up pretty much about the same increment, okay? But then there is also the rolling month, okay? And so this is basically anywhere from 20 to 25 trading days. And so this is how I kind of set this up. And so this is the way it kind of finished last week. And we can see for the month, consumer discretionary, and then these other ones down here, the industrials, transports, and materials. These are all the weak ones for the month. Okay, so these are all kind of chunkier time frames, right? Obviously, looking at a week, looking at a month. Okay, but now there is also a way that one can sort of think about this stuff in a more granular fashion, and that is looking at this stuff intraday. Okay, so this is what I was looking at yesterday, and then obviously I'm going to show you some history of what happened yesterday, and then we'll actually then flash forward to today live, and we can see where we are, and then how we can apply what I did yesterday. How to apply that to the live market action today, okay? So this is what I was looking at yesterday, okay? And very, very soon out of the box, after the opening bell, energy obviously was the thing that kind of just rocketed out and was sort of head and shoulders above all of the other sectors, okay? And so as things started to move in the first half hour, 45 minutes, this got my attention. Incidentally, this is a 65-minute chart. We can call it an hour. And so each one of these dots, each place where there's a bend in the chart represents 1 hour of trading action. And so this is just kind of giving me the big ebb and flow of how the sectors are kind of going, okay? And one can make this finer, one can make this, make this more granular. I tried doing this on a 5-minute chart. I just found it really annoying. And this to me kind of gives me what I need to see. So out of the box, kind of saw energy was kind of flying. And at that point, when last week, a couple of weeks ago, when I went through all this, I talked about the whole concept of supply and demand and looking for an exhaustion of buyers and sellers in order to that when there's a region of demand, which is basically an area of upward price pressure, when we get a pullback to that, that is something that basically indicates that there is a likelihood of another bounce out of that area. And so that's obviously the setup for a long trade. Similarly, when there's an exhaustion of buyers above us, that's an area of downward price pressure that's remaining. And so when there's a corrective rally up to that region, when price then gets to it, we can expect downward price pressure. And of course, that would be a place for either a short stock trade or taking some sort of bullish options trade. The most straightforward way, of course, would be to be buying a put. So this is what I was looking at yesterday. And I said to myself, okay, price is rocketing out of here in terms of energy. Energy is the high flyer. This is where I want to see if I can find some setups. And when it first started out, it just never looked back. And it just kept going and going and going and going and going and going and going. So now we're basically about, about 3 hours and 15 minutes into the session. And so when this dot appeared here, this was, 9:30, this is about 12:45, 1 p.m. Somewhere along these lines is where I think I took this snapshot here, okay? And I could see things were starting to level off. And at that point, I'm going, okay, I would really love to see some sort of pullback here. Because if I can get some sort of pullback on the energy sector, then it actually might fall into one of these regions where there is this upward price pressure. And I could then basically have a setup for a long trade. So this is what I was looking for this thing then to finish leveling off and then actually start to dip. Okay, so that's the battle plan. And in a sense, you could see, like, let's say down here on the transports. If we look really closely, you see this blue one here. Notice how it came up here. And, this is unexciting because this was just, kind of a middling, there was no real action here. It was up 0.3%. But you can see from the picture that it went up here. And then you notice there's that pullback there on the blue. Okay, that's what I'm looking at up here, except this is the sector that actually has major energy and major potential. Okay. So I flash forward here now, okay, as that happened, there we go. There was the pullback, and then shortly after that, we then ended up with a rebound, okay? So this is what I was looking at, okay? All right, so that's the underlying principle in the setup for what my objective was. So what I'm gonna do now is, what I did yesterday was, as I was working, I was taking screenshots furiously of this, and to the best of my ability, I think I pretty much have them. I am not the Kardashians, so I don't have a camera crew following me around. I wish there was something analogous to that could somehow take snapshots of selected charts, but that does not exist at the moment. But I think I actually pretty much have I think I did a pretty good decent job of documenting a lot of what I was looking at. So what I'm going to do is I'm going to show you now what I was looking for on this principle, and then what actually transpired. Okay. So let's see here. So what I did was in my platform, and let me show you how that kind of sets up in the platform here. So what I have in my platform is I have, basically a watch list. And obviously it's got, a whole bunch of stuff going on here. You can ignore all this other stuff here. I have various indicators I'm looking at here. But the bottom line is, in my platform, I have every single sector ETF set up in here. And you can do this on your own. And you can kind of go into the website. And I think I actually showed this to you a couple of weeks ago, of the Spider ETF website, and where you can actually grab all of the stocks that are under the hood of all of these ETFs. Okay, so since I decided that energy was where I wanted to be yesterday, I kind of went down here and right here is energy, okay? So right there is the energy ETF. And then these are all of the portfolio stocks in the XLE, okay? So I'm all prepared at that point to say, okay, I want to be looking at energy, and here's essentially my little local watch list of what I'm going to do. And somebody, a couple of weeks ago said, okay, how do you scan for stocks and how do you scan for opportunities? So this is one flavor of how I do it. Okay, so you basically identify, the sector of interest on an intraday basis, and then basically look at what are the stocks that are under the hood. And obviously, one can also get more granular about this. In addition to looking at the strong sector, you could equally also be looking at things on an industry-wide basis. So, for instance, you read something in the morning that might say semiconductors are really strong. Well, then you can look at the the SMH, I think it is. I'm blanking on it, but I think it's the SMH, which is the ETF of semiconductors. And so similarly, you could be looking at that and looking for opportunities within that. So, for the moment, I'm just kind of looking at stuff on a sector-wide basis. But again, one can get a little more specific about that. So what I did yesterday was I started scanning through all of these stocks, and I started just eyeballing them. I just started clicking through all these. And in terms of having your platform set up, what you should do is have a watch list set up, and then have some charts sitting there. I happen to use what is referred to as the triple screen. And if you're familiar with that concept, if you Google Dr. Alexander Elder, he's kind of one of the gurus of multiple time frame analysis, and he talks about the triple screen. And basically, the triple screen involves basically having 3 time frames and having a higher time frame, an intermediate, and a lower time frame. Okay? And you can kind of read about that, and it's quite useful. We can talk about that at some other time. But anyway, so this is what I started to do yesterday, except rather than looking at these things in these higher time frames, I started to look at them in lower time frames, okay? And so rather than having this, having these time frames here, what I had was, let's just get here, time frames. They basically now have the same exact setup that I just showed you there, but rather than looking at a weekly, a daily, and an hourly, rather than that, I had basically a 1 hour, a 15-minute, and a 5-minute. And so this is what I was using yesterday in order to kind of scan for opportunities, okay? So now we go back here. I scanned through about those 25 stocks, okay? And this is just sort of what I came up with. So this is EOG, I don't know what it is, okay? But what I did was I ultimately identified 5 stocks that seem to offer good demand zones. These aren't always necessarily like the prime ones that I would necessarily use for like a long-term options trade or a major swing trade, but for something that's kind of a quick hit and sort of an intraday trade that you might be in 15 minutes, 30 minutes, 45 minutes, it doesn't necessarily have to be something of the same quality that you would be looking at for let's say, something you're going to be in for a week or several days or whatever. So anyway, this was one setup that I was looking at. Okay, price came up, rallied here, consolidated, and then we had these 2 very bullish candles that came up, kind of pops up there, and now I'm waiting for the pullback there, okay? And all of this was happening, you can see, around 12:45, okay? Here's another one, FANG, okay, Diamondback Energy, price came up, notice the consolidation, notice that very bullish candle that rockets out of there, okay, pops out of there, again, waiting for a pullback here, and this would basically be our entry, okay? So entry here, stop out point there, okay? Another one, MPC, what is it, Marathon, I think, Petroleum, that's 1 p.m. Here's another level, okay, price rallies, consolidates, very, bullish candle here, and then that march of green ones up here. So again, all of these things reflect an area of upward price pressure where there wasn't a whole lot of this didn't spend a tremendous amount of time in here. If this thing spent like an entire day or 2 in here in the context of this time frame, well, then that wouldn't necessarily be the greatest thing. the fact that this was only in here kind of basically in here for about an hour, it means that basically not everybody that necessarily wanted to buy and sell in here got the chance, because then all of a sudden that price exit here and the fact that it came out of here very bullishly basically reflects the fact that there was a sudden exhaustion of sellers here. So the sellers disappeared down here, and all that was left were the sellers disappeared, and all that were left were buyers. And for these trades to occur, all the buyers basically had to run up the price chart until they found willing sellers, and then that's how that run occurred. Okay, so that's another setup. Here's another one, PSX, and I actually identified two levels that I liked, sort of two different price lenses: the 5-minute and the 15-minute. Okay, so here was a level that was sitting up at around just above $67. Okay, and then here's a one that was lower on the 15-minute level. And so depending on what was going to happen, I was either going to basically perhaps take a trade here, or perhaps be more patient and wait for it to come down here. Because in a sense, this actually, both of these are actually quality levels in their own way, contextually. These are actually both nice levels here. So this was the other thing that I was looking at. And then the last one I was looking at was the XLE itself. Okay, so this is the ETF itself. So again, price came up, popped out of there, was heading there, and again, waiting for that pullback. As an aside, as an odds enhancer, when we actually get into the trades on the other stocks, in a perfect world, we would actually see this thing pulling back to its zone, because at that point, then you would have the sector actually showing up with price pressure along with some of its constituent stocks. And that would obviously make for a great odds enhancer to have, in a sense, the bigger picture pulling along the littler picture, which are the individual stocks. Okay, so these are the setups that I was looking at yesterday. Okay, so what happened? All right, so here's EOG. And so here's the thing, first one we looked at before. So here's what we looked at earlier. So there's the setup, and price came back, pulled back there, and basically we ended up there at around 2-to-1. So right there in the space of about 30 minutes, pull back to there. So in the space of anywhere from 30 to 45 minutes, we basically ended up with a 2-to-1 move there. Okay, so there's one setup there. Okay, and then this is what I was actually looking at also to help with my targeting also. Once you're in a trade, you can also bring up and go to sort of a higher time frame to sort of look at to see what might get in the way of your trade. So this is what I was looking at as I was in this trade here. Okay, in context, we were basically getting to here. And so I could kind of see, you know what, price had already kind of dropped out of this level right here. And so as a result, that was probably the end of the line there. And so as a result, that's where I kind of took profit. And I kind of used that as guidance. Okay, so that's one thing that we were looking at. Okay, here's Diamondback Energy, FANG. So here's the setup I just showed you a couple of minutes ago. Get price rallied up, pop that. So this is what we're waiting for. Okay, and when price came back, and I actually dropped it. Before we looked, I was looking at it at a 10-minute chart. When things actually started to happen, I dropped it down to a 5. It just kind of allowed me to watch it better, and be able to watch the arrival better, because the arrival effectively affects my perception of how the setup might go. Okay, so I dropped it down to a 5-minute chart, but this is the same exact thing. This is the same level from the 10-minute you just saw. So price came back again, dropped down here, popped up, and right there again, pulled back a little, and again, right there, another nice little 2-to-1 trade there. Okay, and because of the fact that price, these levels, you can see there's some trading here. Price came up, it dropped out of there again. Price came back again. I was like, you know, I'm not going to get greedy. I'll take the 2-to-1 again. 30 to 45 minutes, pay some bills, nice little trade. Okay. Okay, and in fact, it actually then continued further. Unfortunately, I did not take that because I really thought that this might, you know, plus the fact we were also getting near the end of the day. This is about 4 p.m. here. Okay, but you can see, had you stayed in it, okay, this actually went to 3 to 1. Okay, but given that this was 2 p.m., I was like, you know what? It's already 3 p.m. by the time I think 2:45 by the time this trade was going on. I was like, you know what? Let me not get greedy here. So that was that. But again, you can see this actually went 3 to 1. Okay. Again, I was looking at this for context. I wanted to see what might get in the way of the trade. So here's the hourly chart that just kind of gave me some context there. Okay, here's MPC. MPC, as I recall, nothing happened with it. I never got a pullback. So this was a no entry. Okay. Here's PSX. I've kind of showed you this before. Again, here we have these two setups, one in the 5, one in the 15. And what ended up happening was price came back, drilled in, actually drove all the way to the bottom of the zone. And in fact, actually went a penny or so out. But because we always give our trades a little wiggle room, this thing came down, I believe, to kind of 66, 66.01 or something like that. Excuse me, 67.01, which is 2 or 3 cents below. But since our stop out point was 66.99, we kind of survived this little near-death experience as it dropped to the bottom of the zone. And then after that, kind of went up, pulled back a little, and then they basically eventually went again. And again, I took this off at, I think, 2 or 2.5 to 1. Okay, so that's what we were looking at. And then on that one. And then lastly, here's the XLE. Again, there's that level that I showed you 2 or 3 minutes ago. Price came up, rallied, consolidated for that one brief candle, came up, again, waiting for the pullback. Price came back, went in, went up, and there you go. And there's another 2 to 1. So that's what I was kind of doing yesterday. If you notice, there's no MACD, there's no RSI there, there's no Ishimoku cloud, there's no spaghetti charts, there's no volume weighted average prices, there's no volume, market profile, volume profile. It's basically finding these areas of where there is basically where supply and demand go out of whack. We have a little area of consolidation, and then we wait for where there's upward price pressure, and then wait for price to pull back and go. And it's, and obviously there's a way of qualifying these levels, but that was kind of a no muss, no fuss series of trades. Now, does it always go that way? Obviously not. I would have always preferred to show you a loser, just to show you what a loser looks like. Because, this thing fails 40 or 50% of the time. But if you notice, though, when it works, and you're choosing quality levels, you're getting 2 to 1, and you're getting 2 to 1, 3 to 1 on your trades. So as a result, let's just say you get into 10 trades, and you're right, let's say you're right 5 times and you're wrong 5 times. Let's say you're getting an average of 2.5 to 1 on your trades. Well, the 5 times you're right, you're making 2.5 units each time. So you're making 12.5 units for the 5 times that you're right. And for the 5 times that you're wrong, you're losing 1 unit. And so that 5, of course, comes off of your 12.5. And as a result, you're netting 7.5 units for your 10 trades. So if your unit is $50, well, then you've made about $375. If your unit is $100, obviously you made $750. If you have a $200 unit, you're making $1,500. But that's how we kind of manage risk and reward. So basically, this is how this whole series of intraday trades occurred yesterday, from inception of basically identifying energy as the strong sector, then being prepared by having everything set up in the platform here, where again I had the energy sector all laid out and all of its portfolio stocks sitting there, and then basically quickly flipping through them, knowing exactly what we're looking for in terms of, in this case, the areas of upward price pressure, and then basically then knowing how to then wait for a pullback. Sometimes when this is going on, if you're trading on an intraday basis, you have to essentially do what I refer to as stalking symbols. And what might happen is you may end up finding, let's say, one level, and then price doesn't pull back to that level, but then it levels off at some point above. And then that becomes kind of the next level that you might be looking to trade. And then you kind of then identify that one and wait for the pullback to, let's say, the higher level. So sometimes you have to essentially kind of stalk these. And in a sense, that's kind of what I did yesterday. Even though I didn't draw any levels, I did effectively stalk the XLE because, again, I noticed 45 minutes, 60 minutes into the hour that I wanted to kind of trade it. But then I really never even saw a hint of a pullback until, I guess that was about 2 hours later, when all of those setups that I just showed you started to kind of appear at 12:45, 1 p.m. So basically, I had to wait almost 2 hours until I actually saw the opportunities and to actually map out setups. So that's kind of the history of what I did yesterday. So now to kind of flash forward to today, essentially one can, of course, now say, okay, well, if we want to try this again today, how are we going to do this? All right, so here's today. Okay, so we are now obviously, what are we? We're kind of 2 hours, coming up on 2 hours into the session here, an hour and 45 minutes in. So, okay, so here's where we are now. So let's see, what are we looking at here? So the financials are really strong, and energy again is really strong. And on the weak side, let's see, what do we got? Real estate is kind of, a bit weak. I wouldn't characterize this as real weak. It's relative weakness, obviously, over here, in relation to everything else, but I wouldn't call this weak by any stretch. It's down a whopping 0.3%. So on a sector-wide basis, obviously one can find shorts all over the place in the market, but on, looking at it from a sector perspective, I don't really see anything that sort of jumps out at me and says, oh, one should be shorting a particular sector here. On the other hand, the financials and energy are kind of looking interesting again. Okay, so energy, of course, looking interesting again, and the financials obviously looking interesting. So what we can do here is just to kind of show you is I will bring up, actually, let me go back to the one that's now set up for the intraday stuff. And what I'm going to do is I'm going to go find the financials. Here are the financials right here. And one obviously has a whole bunch of symbols that are in there. And what is it? 207 to 141. So there's approximately 65 symbols under the hood of the XLF. So that obviously gives you a whole healthy host of things that one can look at. And what I have here, and let me just show you really quickly here. So what I have here is, this is the, in the watch list. What I'm doing right here is I am actually arranging these in order of move on a percentage basis, okay? So I have the ETF separated up here, and then what these are showing from the greatest move down to the lowest move on a percentage basis. This is how much these have moved here, okay? And so if you set up your watch list to do that, okay, you can see then right down here, these are ones that haven't moved, and then here's actually kind of the weak sisters of it. These are a couple of in the ETF that are actually down on the day, okay? But as you can see, obviously the vast majority, of course, it's a sea of green here, okay? So, and these are, of course, showing much greater relative strength than the XLF. The XLF is up 2.3. Okay, these are all up over twice that. Okay, these are in the 5s and the upper 4s. So these are all major moves here. The other thing that I also do want to show you here, as long as I have this up here, when you set up your watch list, is I actually have two things that kind of reflect where stocks are. Okay. One is, this is basically looking at it from the previous close. Okay, so in other words, this thing is up. This is at 77.42. Well, the previous close yesterday was 33.85. So that would be like at around 70. What is it? 73.60 something. Okay, so that's where this closed yesterday. Okay, but the other thing that I have here is the net change from the open, okay? Because really what this thing, on a lot of these stocks, it was actually a gap that contributed to this, okay? So this thing is up 386 today, but from the open, this is actually up to 277, which means that really what happened on CMA is that there was a $1.10 gap. And then from that, there was about $1, then 270 of follow through once this thing gapped, after the gap. So we had a $1.10 gap. So what this is showing you here is where is their follow through, okay? Because what you're going to have on a lot of these stocks is you might have some stocks that go up and they may be up on the day, but then if you look to the right, you may end up finding that in fact, they're actually down after the open. So for instance, right here, in fact, the NASDAQ itself, okay? So the NASDAQ has its own stock, of course. It's up $1.18 on the day. Oh, excuse me, MSCI here. It's up 385 on the day. But in fact, it's actually off $1.39 from the open, which means this thing was actually up about 530. Okay, and there was no follow through. So this, in a sense, probably doesn't interest me a whole lot because of the fact that, you know, and of course it's up on a percentage basis and, you know, this is, you know, a really expensive stock. But as a matter of principle, I'm not necessarily interested in something that didn't show any follow through off of the open. Okay, so one of the things that you can monitor is the net change from the open and as versus the net change. If the net change from the open is significantly, you know, is red, and particularly if it's significant red, then that might tell you that might not be an interesting stock, even though something is up on the day. It may be showing you that in fact there's no pullback. It doesn't have any legs. It didn't have any legs after the gap, and so to some degree, its increase on the day was a one-trick pony. It was only the gap. And that's not going to, there's nothing to trade at that point. Okay, you know, unless you recognize that it's actually really weak on the day, and you may turn around and turn it into a short. But that's kind of that's a different discussion. Okay, so let's go back here now and let's bring this up and let's just start kind of flipping through some charts quickly and see what we see here. So let's fix that here. Oh, sorry about that. Second, fix that setting here. All right, so we're looking at this 5-minute chart. All right, so this is an area right here. That doesn't interest me though, because this didn't go anywhere. But probably in here, there might be, this might be sort of an area of interest over here, 37. Because you also want to see that once this thing goes, you actually want to see if in fact, you know, it offers any sort of profit potential. Because if it doesn't offer any profit potential, then obviously it's not going to be all that interesting. So this is the 15-minute chart here. So if I'm looking for something here and we get this thing leveling off, this is probably going to become my level of interest, area of interest here. And so I might just kind of drop this down to, let's say, to a 10 and see if I kind of see anything. Okay, and you can see right there, notice that one little red candle winking at you in the middle of all that green, and the fact that it's a very indecisive candle. Well, that's kind of yelling at you that this is kind of like the middle of a consolidation. So at that point then, I might be looking at something that looks like this. And I have to tell you, on the ETF, doesn't interest me because I basically need to kind of account for this huge wick here. And structurally, I don't like this. It doesn't really offer a whole lot of profit potential because of the fact that this doesn't go very far out of the zone. So right here, if we just kind of look at, let's say, here was our entry. Let's say if our stop is going to be here, you can see this thing barely went to 1-to-1. So I wouldn't be necessarily interested in this looking at the ETF. Okay, but then if you just start flipping through the other charts, you might end up seeing something different here. So why is this? Sorry about this. Why is this not giving me? It's just sitting all the way out there. Let me see if I can fix this. Oh, there. All right. All right. So let's see here. If we see this in a 5 minutes, doesn't look all that interesting. I apologize for why my platform is kind of wigging out on me here. You should all be visible on the right side. I don't know why they aren't. Okay. So this one's starting to look interesting. CMA here. And in fact, not that I expect you to remember this, but if we go back, I'd like to show this to you really quickly, just because one of the things that when you kind of create setups is you kind of get pattern recognition punched into your head. And if I'm not mistaken, I believe one of the setups yesterday looked almost identical to that. Let me just see here if I can quickly find that. Yeah, there we go. So if we look at MPC here, okay, so there's MPC. Let's see if I can kind of identify that. And here is CMA. If we kind of bring these up simultaneously, you can see kind of reminiscent of that, right? Pretty much kind of relatively the same kind of pattern, and also in the same kind of position. And so even though we didn't get a pullback to this, this was actually one of the charts that I really liked yesterday. So I think this actually offers some good prospects here. So CMA is obviously one that I might like here. Okay, so I'm gonna make a note of this because after we're done here, we'll end up posting these for you guys. So this CMA, and what we would basically then do is identify this as an area of upward price pressure. Okay. What I also like to do is look to see what is the ATR on it. So the daily ATR on this is 54 cents. So incidentally, even though this is a 10-minute chart, this indicator is keyed to what the actual daily is. Okay. So this is not a 54-cent ATR on a 10-minute chart. It's a 54-cent average true range on a daily chart. Okay, which means that I like to take 10% of that, and that becomes my wiggle room for the zone. So that means I would put my stop at around 37 cents. So that's what that setup might look like. Okay, continuing down here.
Hey, Mitch, I have a question if you're okay being interrupted.
Yeah, please.
So she doesn't want to answer, she doesn't want to turn her mic on, but the way I'm going to give you my interpretation of the question, and then you
Sure.
give me yours, right? So she wants to know, is this difficult to do on your own? And I think she means from stem to stern process-wise. And let me give you my 2 cents that I think might be slightly self-serving to Mitch and I. And my opinion is this is hard to do starting from scratch on your own with no help. So one of the things, and David and Amit are here, and maybe they can even speak to it, is that doing this on your own and building it from nothing while trying to teach yourself, extremely difficult. Doing it with some help and some guidance that Mitch and I provide, everything becomes a whole lot easier, to be honest with you, because you have a shoulder to cry on when you're struggling, someone to go to for help, and someone to lead you in a direction or put you on a path. So trying to do this from, even from watching our stuff, I think this is what we do is like a first step in introducing how we trade, but it's just a first step. It's not taking information and putting it into action. So because I think that's where the rubber meets the road. And like I said, I said self-serving because it sounds like, well, I'm saying we're the only ones who can teach you how to do that. That's not what I'm getting at. I think we're really good at it, and I think we can help just about anybody. But I think just trying to put together a process to either day, swing, even to position trade, meaning that you're almost an investor, I think is extremely difficult without help. Mitch, do you have your 2 cents on that?
Yeah, I do. Let me show you. First of all, everything that Ryan said is precisely correct. Secondly, I'm kind of showing you the process from stem to stern. And I also showed it to you from the context of looking at strong sectors, okay? But there's another way one can do that, where you eliminate almost that entire front end. And you're basically just looking to see, okay, what is really moving today, almost without regard for the sectors. And so that involves the use of what are referred to as hot lists. And let me kind of show this other way, kind of simple way of screening, okay? So all of that eliminates that whole thing. Am I looking at the sector charts? Am I looking, what am I looking at here? So right here, this is what's referred to as a hot list. Okay, and all I've done here is, and this is simple to set up, and when one can show, anybody can do this, is all the platforms pretty much have some sort of flavor of this. So what this thing does is it basically, you can set all kinds of various criteria in your platform. And so what I've done here is I've set this up and I look at this in the pre-market and near the very beginning of the open. And so what I've done here is I've set this thing up. So remember I talked to you before about gaps? So what this thing does is it arranges stocks when they gap up in the beginning at the open, okay? And so that's what this gap up percentage is. So all of these are stocks that gapped up, okay? And what I've done is I set this thing up, and you can, in order so that I don't have 7 million of these charts up, because I want things to be simple. There's enough screen territory taken up. And I have to tell you, during the pandemic, and Mitch and David and Ryan, they all know this from I used to have a nice I had a 24-inch monitor set up, and it was awesome. And I just had everything laying around every place. It was easy. Screen territory was never an issue. Now it's an issue. I'm working off of a 17-inch laptop for my home. It's the way I keep domestic tranquility in the living room. The lady does not want my lady does not want to see a 624-inch monitors in the living room. But that's funny how she is. And of course she only majored in interior design as well. So I can't imagine why she doesn't find this the height of fashion. So at any rate, so what this is doing is it's showing gaps up at the open. And for the moment, I have it set for the NASDAQ. Okay, but then you can also set these for any of the the other exchanges. Really, just the NASDAQ and the NYSE will kind of get you there. Okay, so I do it for the NASDAQ, because you can also set this for all. Okay, and now it basically combines them. But I kind of like the idea of looking at each of the individual exchanges, and there's a benefit to that. I'm not going to go into this. So the bottom line is, here are all the stocks that are really moving, that are really hauling butt. Okay, and so as a result, you can see these gapped up, and then you can see these all gapped and went. It gapped up 7%, and now it basically went another 7.5%. It's now up at 15. Okay, MAGS is up at around this basically matched its gap. Okay, this one gapped up just a bit, and then it's just raced. Okay, so all of these are high energy stocks, okay, that gapped up, and then so all of these represent opportunities. And so one can immediately start with these. And then what you want to do is just look, and then I basically do a volume thing. I also want to be trading things that have liquidity. Okay, so all of these, the $250,000, that's marginally acceptable, because you figure, that means it's probably, going through the day, it's probably going to end up with, 500 or 750 by the end of the day. Yeah, that's okay. But this is $500,000, this is 4, this is 22. I'm not in love with the CMAT that's only traded 63 million here. Okay, but all of these stocks that are all trading in the millions of shares, these are all highly liquid. So these are all useful things that one can start to actually screen. Okay, and so what I've done is I've set this up for gaps that are up, gaps that are down, and then what are they actually doing on the day? And then there's a volume. So so what I'm looking at here is I've got this set up with 2 time frames, a 15-minute and a 3-minute. Okay, so I've got sort of this little tiny intermediate time frame, and then I've got this minuscule time frame over here. And again, I have these linked to this thing. So as I click through symbols here, okay, now obviously my, these charts are changing with that. Similarly, I have this set for the gaps down, okay? And then again, same exact principle, except these are the gaps down. And then I can click through these and look for gaps down. Okay, so this is where I can kind of look for look for shorts on the day, on an intraday basis. I'm using the hot list. And then just for help, I color code these so that I kind of know, okay, so if I decide to, let's say I'm going to start copying and pasting these charts somewhere else, any of these ones that are sort of blue-green, these I know all represent long setups, and this pink background represents short. So that also helps you in terms of your process. Okay, so if I start to flip through these now, rather than, let's say, looking at the sectors, okay, all right, so that popped up, it's just kind of grinding along, not interesting. Okay, this is one of those where it actually gapped up, and if I was looking at this other one, you can see it gapped up, and it actually dropped below its gap. Okay, so far today, this has just been a one-trick pony. Okay, so I'm certainly not looking, maybe over here, I think I could be looking for a pullback into this region, but I'm not enthused, at least at this point, unless this would really form a zone here. So not interesting. Okay, again, up, drop, it has dropped ever since the gap, not interesting. Okay, all right, so CMAT, it's moving, but I'm not thrilled with the volume. But if I, but let's just say if I was going to not necessarily worry about the volume so much, because I am a little suspicious about that. This would certainly be an area right here, and it would basically be you'd be almost looking for a pullback, really to the origin, to the destination of its gap. Because right here you can see price gapped up, consolidated. Then we actually had a little gap here that continued. And so that actually might be an interesting level right there. Like I said, I'm a little suspicious about this because I don't like the fact that it's not liquid. But that would conceivably be, though, an area of interest for a day trade. Okay, this again, nothing exciting because again, pull back. Okay, this is one where let's see here. This is actually this is kind of noisy. Sorry about that. Okay. It's kind of noisy, so I'm not interested in it. Let's see there.
Mitch, is the scanner for the gap up at open? Is it for the first 10 minutes of the day or the first 30? Is a question.
This is one, I believe I would have to look at it. I think this is basically at the open. It's literally at the open. In other words, what is its opening tick versus the closing tick at, talking Eastern time here at 4 p.m. At the close the previous day. So that's its opening tick.
Two other questions if you haven't found what you're looking for just yet.
Yeah, fire away.
So someone explain what how you're using the retracements, the Fib retracement. I know what it is for risk reward and what a zone is. And then someone did ask if we could look at Disney.
Sure. All right. So let's see, in no particular order. Let's just say, what did I say? CMAT was one we were looking at before, right? Okay. So let's just say hypothetically, we were going to look at this as a trade. Okay. So I used, and somebody very accurately pointed out, perceptively pointed out, that I was using the Fib Retracement Tool. The Fib Retracement Tool is a hack. Fib Retracement Tool is obviously not designed for that, right? Your traditional Fib Retracement Tool obviously is you kind of, let's say, you're looking at this, right? And you basically, you basically say, okay, when this thing pulls back, and just show you. All right, let me just let this come up here. It's a little leisurely. So let's just say, I think I have the 88.6 here, and let's just say I set up the, let's just say I was going to look at the 61.8, 38.2. So those are like some of your traditional. Okay, so whoops, upside down. So if I was looking at this and I was going to say, okay, right, now that we have this move up here, okay, this is the traditional way one looks at Fibonacci retracements, right? So if this is your move up, this would be your 38.2, this is your 61.8, this is your 88.6. Okay, so that's the traditional way of using this thing. But somebody showed me this awesome trick with the using this tool, and then since some platforms just have this built in as a separate tool, TradeStation for whatever reason doesn't. So if your platform like mine doesn't have this, what somebody showed me this little trick is that you can basically use this tool to basically use this thing for risk and reward. And all you do when you do this is when you go into your settings, wait for this to come back again. Come on, you can do it. There you go. When you input this, if you look really closely, and I can't blow this up anymore, but if you look closely, okay, you put in 100, 200, 300, and each one of those represents a 1-to-1 move, 2-to-1 move, 3-to-1 move. But if you look really closely here, you'll see they all say negative 300, negative 200, negative 100. And if you put those negative numbers in, okay, and then you use that as your the origin, and you use that as your stop out, and then you have those negative numbers in, well, then it lays out like this. And so basically what this is showing you here is this is the depth of your zone. And what I think I showed before, what was this? The depth of the zone, I think, what was it we were going to use? Okay, so the depth of the zone here, okay, the ATR, it's a very small ATR. Okay, so let's just say I was going to use a nickel here. So I put this up at 58. Okay, here's my entry. So my entry is 43.86. My stop out is 58. And then basically this is showing this is 1-to-1, 2-to-1, 3-to-1. And all this is really doing is showing really what this is showing is this. So in other words, if the trade moves from here, pull that down to stop. Let me replicate this now. So what all this is now showing you is this. This is showing now, if you go, that's a 1-to-1 trade. And if it goes another increment, that'll be a 2-to-1 trade. Okay? And that's what this tool does. So really the whole key to it is just put in negative 100, negative 200, negative 300. Then you place the origin of effectively the origin of the move here, the end of the move here. And then when you stretch it out, you've got an instant risk and reward tool. It's an awesome hack. Somebody showed this to me years ago, and I was just like, awesome. Because otherwise, what you have to do is, you kind of have to do the mental arithmetic of going, okay, I'm going to get in here, I'm going to get out. Maybe if I'm going to get out there, here's I stop. I got to do the addition, the subtraction, all that kind of stuff. This kind of just lays it out for you visually, and also gives you all the numbers. So it's a really cool hack that somebody showed us there. As for what the zones are, that's a discussion, because that's our entire methodology. But the bottom line is we're looking for these areas of upward price pressure where there was some very minimal activity in it before it got created. So right here, again, we have this gap, little consolidation, then a gap, a very bullish candle, and then price kind of runs from there. This is indicative of an exhaustion of sellers here. And so the sellers very quickly disappeared out of the zone after consolidating. And so in a sense, the narrative is when price, when when price was here, there might have been other buyers that wanted to buy. They just never got the opportunity to do so because the party ended very quickly. And so right now, when price starts to pull back here, if we end up pulling back into the zone, we might just end up with a long entry. Okay. That's part of our program here, and Ryan can tell you, a little bit more about that. You'll schedule a call with us. We can certainly tell you a little bit more about that, and I'm happy to, of course, to join in on any of his calls as well. But anyway, so Ryan, was there a third question there?
And then someone wants to look at Disney.
Oh, sure. In the context of a day trade or something longer term?
Probably longer term, I think.
Okay. In fact, right here, if you notice, I actually had something laid out here. The price came up, and then in fact, I had adjusted the stop here. Price came up, it came within a whisper there, and then it kind of dropped out of there. Let me clean this up here, though. We'll just kind of look at a fresh chart here. That was all ancient history, of course. So right now, we're kind of in a chop fest here. As you can see, we're kind of in this channel here. So we're kind of, sort of back and forth between this channel. And you can see we've been, for the last, what is this, about 2 months or so, 3 months, actually mid-May, this is really 4 months, sorry. We've been kind of between this range of 167 to 187. So that's a $20 range off of a 100, and let's say average 170 stock. So a $20 range off of an average 170 stock is about a 12% range that we've been sort of bouncing in between. So, overall in the big picture, it's been kind of chopping around here. But I think I do see something interesting here. So let's go in the 60. So let's go to the 1 hour chart here. So two areas kind of catch my eye here. One is right here for a potential short, as well as here. And then in terms of of a possible long, this one might offer something, but I'm a little hesitant about that. It's been in there for a while. I like this very, notice this extremely violent move down here. Like I said, for intraday trades, it doesn't necessarily have to be as like this, like when I showed you those 5 setups earlier on the energy sector. But when you get into a swing trade, you really kind of want to have something that's kind of really got some oomph behind it. So I think I kind of actually really like this. And then this one above is actually kind of nice too, because you got a massive gap down here. And then, then it kind of a little pause and then it kind of goes here. So both of these are kind of interesting levels on the short side. And then on the long side, let me see if this level's been hit. Because right down here is certainly a level, would have been a level of interest, and this probably translates very nicely into a daily level. Okay, but right here, this was an area. Notice price came down, dropped down here, consolidated, then rocketed out with these 2 very bullish candles, and then kind of started creeping. But this is kind of a nice level here. So this is what we refer to as a drop, a base, and a rally here. Okay, so price, there's the drop with that gap, the consolidation, which is what we refer to as a bit in the base, and then the rally. Okay, so let's see what happened when price pulled back. Didn't quite get there. So I have to say, I don't see anything near term on this, but I think, sorry?
No, I was saying it's so far away. Like if it comes ripping into that, you don't exactly want to get in front of that either.
Yeah. So, but basically, I think this would if I was inclined to kind of look for a swing trade, or let's say a longer term options trade, or selling premium, using Disney on at least on the bullish side, I think probably that's probably the first area that I think is really quality. This area right here on an intraday basis might not be horrible. If I drop this thing down to, let's say, a 15-minute, let's see here. Nah, I don't like. No, not
Too much
love. This is just the chop fest in here. There's a technical term for this. This is what's referred to as a mess. And you'll learn that. I think John Bollinger invented that term. I believe it's called a mess. Yeah. So I think in terms of that, so that's that 65-minute level that I showed you. And like I said, I have a feeling if one all right, doesn't quite turn into, it doesn't have enough candles in this. But you know what? In fact, I don't even like that. Because if we go back further, if we notice right here, and that's an entire other discussion here, the fact that this is really the original level that really worked. Price came down, came up here, consolidated, then rocketed out of there. And then when price came back here, it did that again. This is really a reaction to that. And so as a result, more often than not, the higher probability trade is when it comes back here the first time. If this pulls back again, in fact, you can see it pulled back just on the, really just on the doorstep of this. And depending on how you drew this level, if I was really accurate here, and if I zone in here, and if I kind of really am really accurate here, drawing the zone and using really exactly where the zone is really supposed to be, really refining it. So using that red candle as the focus. If we now go back to this, and then we zoom in on this, here are our two entries. And there's the other one, right down, I think probably to the penny. It came back here again, and that level worked for a second time. So, nothing really. I'm not in love with anything. Let's see, Disney. Yeah, Disney came down to 169.81, and that's exactly the front door of that level. So this level clearly worked twice, and in fact, it's now worked a third time. So yeah, I'm done with Disney. I think until it goes below something here. So yeah, I don't see anything that I really I'm in love with this.
This is the portion of the event where we call it good trade, bad trade, and there is no trade on this one. So,
well, no trade near term.
Near term, yeah.
But if you notice on the short side, those are those blue circles that I drew a couple of minutes ago, and those are the ones that I think showed up in either I can't remember, was it the 65 or the 15-minute? I can't remember. Yeah. So this one. And this probably refines nicely into a 2-hour chart. 2 hour, 20. Yeah, there we go. So I think I kind of like this in a 2-hour chart. I think that might become the basis for a short trade. And at that point, then one can express the trade. And then and basically you can express the trade in any one of three ways. You can either short Disney, you could buy a put, or you could actually sell what's referred to as a bear call spread, and you could actually sell premium on this. So basically, there's always three quick ways that one can express this trade using that level. Yeah, go ahead.
Mitch, the last thing before we wrap up is that to avoid technical difficulty, if you would just pop up the cues on the 2 hour, the trade we laid out right at the beginning of the call just went red, luckily, but it's starting to come back up now.
So you were, is this the thing that you were looking at right here?
Yep. I can't take credit for it though, because Mitch found it, but it just made entry as we started, and it's not going gang. Well, no, it's pretty not too shabby. 370.
No, sometimes this just in. Trading is a lot like life. There's not always immediate gratification. So sometimes you get into a trade and you got to let it play out.
Yeah.
So that's I like. I always like. I like the setup because basically you have a gap. You have a massive gap here. Even though this turned out to be sort of a middling candle, it really kind of dropped down. And even though the follow through on this candle wasn't great, it definitely went red. So this and then the next two candles were great. So no, this was a nice setup. But if one was actually going to use this as a setup, again, I'd look at the ATR. So it's $4.80 on the ATR. Like I said, I start with that and looking at that just sort of on the size of the zone. And what is this? This zone is about $1.40 or so in depth. So 48 cents. That's a little much to give it, but I would probably give it like an extra 30 cents there. So I might put my stop at roughly about 175.18 thereabouts. So that's what that trade would look like. And so basically, if we get into this, and if we're into this trade, and let's say I would probably be looking at perhaps this as an initial target right here. So basically the front door of this zone is about 370.43. So I might be looking, this is where I think that if in fact this actually does start to drop, this is where it's going to start to sort of incur some resistance, which in fact, I shouldn't use resistance because obviously as a technical term, this would obviously represent in a sense a rough form of support here, that this might stop the drop here. But if this thing actually does start to roll over and go red, this is where I kind of looked at maybe sort of take an initial profit. And then basically if it went further, then I would also be looking at probably this other level right here. I would probably use that as my second target. Right. Yeah. So that would be $367.66. So you got this level, that level, and this would kind of help you select your target. And so basically you could use that as your first target. And then of course, then your 3-to-1 basically it pretty much aligns with the beginning of that zone there. And so that could represent your second target.
Cool. Good stuff. I think I covered all the questions, Mitch. So I think we're good to call it a day. Attendees, after this is done, I will email out I forgot when I put my calendar link in the chat disappears. So no one, unless you copied it. So I will email it to you guys if you attended. And we will reconvene next week, same time, same bat time, same bat channel. Mitch, any last words?
No, except thank you all for attending. Like I said, we're happy to get on the phone with you and talk to you a little bit more about kind of learning what's under the hood here. So why don't you schedule a call with us? Anyway, thank you so much for attending.
All right, thanks, folks. Thanks for coming. I will see you guys again. And Mitch, thanks for cool stuff showed. And I'll talk to you later.
Later.
All right, bye, guys. Take care.